Hey everyone. Oh no, the Federal Reserve increased their benchmark interest rate by 75 basis points or 0.75%. And now my interest rate's going to go up. But not really, because the federal funds rate is not directly related to mortgage rates. The federal funds rate is the rate at which depository institutions like banks and credit unions borrow money from one another. So if you've got a depository institution that has a surplus of funds and another one that has a deficiency in funds, the one with the deficiency can borrow funds from the one with the surplus in order to have funds available to lend money on auto loans, personal loans, credit cards, things of that nature. So ultimately, the reason why the Federal Reserve is increasing their benchmark interest rate is because they are trying to slow the demand of borrowing, the demand basically from the consumer in the economy to give more time for basically the imbalance between supply and demand to kind of catch up with one another. By doing this, their ultimate goal is to bring inflation numbers down. We've all heard about supply chain issues. When you have a high amount of demand and a limited amount of supply, prices are always going to go up. It's a law of economics. So by the federal funds increasing their benchmark interest rate, and it becomes more expensive for banks and depository institutions to borrow money, they're going to pass along that increased borrowing cost to the consumer. As a result, the consumer is likely going to either one, choose not to borrow or think twice about borrowing because it's going to cost them more as a result. So this is all a play by the Federal Reserve to decrease inflation numbers, which, we all see the cost of everything, from gas to food, multiple things are going up. So ultimately, mortgage rates hate inflation. I've mentioned this before. And as the Federal Reserve fights inflation and those inflation numbers peak and start to come back down, mortgage rates will actually come back down as well. The Federal Reserve increasing their benchmark interest rate is not necessarily a bad thing, because if they curb the inflation numbers and those inflation numbers do start to come back down, a lot of people that purchase this year at higher interest rates will potentially, within the next 6 to 12 months, have the opportunity to refinance their mortgage rate and save money. So no need to freak out. The Federal Reserve increasing their benchmark interest rate does not mean that your mortgage rate is going to go up by 0.75%. It may actually be a good thing for people that have a mortgage or that bought a home within the last, 6 to 12 months, 6 to 8 months when interest rates were a bit higher, because it will potentially give you the opportunity down the road to refinance into a more favorable interest rate. Take it from me, because I'm smart. Have a good day.